Good morning, everybody. This is Live Trading Talk with Patrick MontesDeOca. It's a great day today. We got a lot of green on the screen, and we are sitting with a very nice build up in our equity here today. So we've been anticipating this kind of a move, although it's been very frustrating that the metals markets, gold, silver in particular, has not reacted to this inflationary pressures that we seem to be getting here. Gold is up $30, silver up 89 cents, 90 cents. Copper is up 13 cents. And we have a pretty strong derivative markets here with Nugget up 276, JNUG up 383. A big move for the double X velocity ETFs like JNUG up 6.8%, Nugget up 6.63%. SILJ for silver, which is the Silver Trust, is up 2.67%. So we have the derivatives pretty strong this morning in precious metals here. And pretty much it's a reflection, a delayed reaction, I would say, to the anticipated Fed meeting that we just had recently. The market had, I believe, anticipated a lot more hawkish news, a lot more talk about raising interest rates sooner. And as it turned out, basically the only thing that they did is to double the reduction of basically the monthly purchases to $30 billion, a reduction on a monthly basis. So we're looking maybe at in about 6 months to take a look and see at that point basically where interest rates are in relation to the economy, how the economy is faring within 6 months in relation to inflation, and so on. Unemployment and some of the economic indicators that I believe are trying to recalibrate into this new economy, into this new normal, you might say. And as Powell himself said it, we're not going back to the same economy pre-pandemic. We're going to be dealing with a whole new different world. It's a virtual world that we're moving into, a highly technological advances have taken place within the last year that are incredible, that have accelerated basically the infrastructure of the internet, and obviously it has accelerated the need to have some kind of a digital asset away from the dollar, away from basically the central bank controlling system, the SWIFT, the US dollar reserve currency, that has been in jeopardy here since the pandemic. When we take into account the amount of basically stimulus that's gone into the US dollar, which is in the neighborhood of 30 to 40%, and we're beginning to see the reaction basically of the inflationary pressures that this monetary inflation has created. It's still far behind as a consequence of the weakness of the dollar, which in essence, the dollar is down 30% basically. If we've gotten an increase in the balance sheet by 30% or more money has been created, it's jeopardizing the integrity of the US dollar as the world's reserve currency. And that's one of the reasons why a lot of money has moved into the digital markets particularly Bitcoin, as a currency because they're looking for an alternative. To some degree, obviously, the money feels that the gold market, silver market, is still within the centralized banking system. It's still manipulated, in other words. And for that matter, it is true. It's been manipulated since the pandemic, obviously, we saw in March of 2020. It's been manipulated. And since the pandemic, obviously, we saw. What is interesting here is to see the gold and silver market, for example. Is interesting here. As you can see here, after making a high of about $30 right after the pandemic from 1164, we've been into pretty much a corrective pattern. And this has been on the face of, obviously, the biggest news that we had, which was the pandemic. And then the market petered out. It discounted whatever damage was done here economically, and it consolidated now since then, identifying the real damage that was done, which is where we are right now. So silver has been more of obviously a corrective consolidating phase here since the highs were made. In January of 21, we had the Reddit raid that brought silver up about to $30 plus. But it obviously just caught the shorts by surprise, and we saw the market revert back again into this consolidating phase that we've been in. And until now, if we take a close look at what's happening here this week, we saw a low of 2141, and this low came right into our weekly expectation of a buy trigger. As you can see here, we published this on Saturday of 2140, and it activated a weekly buy trigger. And as you can see, the numbers on the left of the chart are the daily numbers, and you can also appreciate that they're in blue. And this is a combination of the algorithm that was written in C++, coded in C++ easy language, that tells the robot not to sell down here, because mathematically speaking, you're looking at a very high probability that if the price comes down here and tests this level, as you can see here twice, that you can expect a reversion to unfold. And so you can see here back in September, 27 was the low. And we were anticipating this low, publishing it in the Associated Press, Seeking Alpha, months ahead of time, as we publish every year. The beginning of our cycle analysis begins on September 28th to September 28th of the following year. And what we saw here was a confirmation that the seasonal pattern begun. The market rallied, and it came back down to test to see if this was, in fact, the seasonal low. And upon testing this seasonal low, you can see it reverted, and it is in the process of reverting. And if we take a look at the trading patterns, we can see a little closer the reversion unfolding from the daily trigger point of 2161 in the weekly. So we're getting a weekly and daily levels. You can see here the market penetrated again the weekly buy one. So we have a weekly buy one and a weekly buy two level. And it completed the targets daily and weekly, as you can see here, and it's entering the red zone. The red zone, again, according to the AI of the variable change in price momentum indicator, is a resistance zone. The pivot points that we use here identify the highest probability for us, converting them to an algorithm that tells us that we're looking now probabilities that anywhere from here 90 to 95% probabilities that if we do get supply in the market, it has the potential to revert back to the mean. Now, the whole thing here in terms of trading is identifying the supply and demand. As a trader, being on the floor for many years, one of the major things that we concentrated on was basically the supply and demand. And that determined basically the flow of the price. And so in terms of where we are right now, the algorithm is a prospective algorithm that it anticipates where that probability mathematically could be at its highest level, or the area, for example. And so, but it doesn't mean that, it's a guarantee. What it tells you is that there's a range of resistance here that, depending upon, again, the supply and demand, the paper that's buying the supply, how strong it is enough that it could take through this resistance the price and meet the target of the weekly target that we have of 2263 for the silver market. So looking at the market from a micro point of view, you can see the market reverting. The low is 2141, and it came in within the expectations of this very simplistic format that we use that has a tremendous amount of intelligence behind it. And this is what we teach in our live trading room. We have some major reversals on platinum, the metals that primarily were hit the hardest, since June, when it was the first meeting that Chairman Powell announced, basically, or it began the talking about tapering. And since then, the only thing that we've seen here is the reduction of the bond purchases every month to $30 billion a month. We have to see once again, what happens here in 6 months, but it looks like, based upon the market action here today, and what's happening here in the gold market, getting through almost $1,800, up $3,250. It's an indication here that it looks like the price anticipated something else than what was said. And to be honest with you, nothing was really said. It's all rhetoric, it's all talk, and nothing really can be done regarding interest rates. This is where I'm putting my money in, basically, in that because of this tremendous pressure that we have of the debt, on top of a weak dollar, which seems to be unfolding, and the need, or pretty much the Treasury, or not the Treasury, but the President feels it needs a lot more stimulus. There's a momentum building up that basically the tapering, and this is also my opinion here, that the tapering that they're doing right now, unless the market begins to reduce its debt, unless the market begins to reduce its inflationary pressure, things are going to be very difficult to raise interest rates. We're almost at a point of a $30 trillion debt approaching. And the U.S. cannot afford to raise interest rates. So the government is going to play a game of fighting inflation and do everything we can and threat that they're going to raise interest rates. But in all reality, they can't. Actually, it is more beneficial for the government to have at this point inflation on the face of all this debt, because it will deflate the debt in terms of the dollars the debt is in, and it's in US dollars. So if we see a 30-40% of the US dollar, that's how much the debt in terms of the US dollar has been reduced. So it's convenient for the government really to have a high level of inflation, because that's the only way that the debt can be paid. And this is the reality that they don't tell you, that essentially silently they're talking about printing all this money, and which essentially goes into an excess, goes to an extreme, and you can see the amount of fraud being committed, the amount of money that's being wasted. The system is flooded with cheap dollars, and the more dollars that they print, the more it's going to devalue the currency, irregardless of any appreciation of hard assets, like we're seeing in particularly real estate. But we're moving into a digital world now, and you can buy digital real estate now. We're pretty much taking the physical world and creating a whole virtual world where you can even have your own avatar, and you can buy real estate and pretty much mirror as closely as possible the physical world. And so, wow, that's amazing. But it is happening. A lot of these SPAC companies that came out announcing all these IPOs with prospects of making money are in the billions of dollars that have essentially sold nothing yet, which is amazing that we're moving into that kind of a environment, investing environment, where the speculation is rampant in terms of those kinds of investments. And so for the purposes of what I'm doing here is I'm sharing with you, with my traders in my room, how I'm trading this market for the benefit of my own account, for the benefit of basically the house account, for the benefit of my traders, and how I'm applying the variable changing price momentum indicator as a trading guideline to trade this volatility that we have. Let's take a look at the markets here for a little bit and see what trading opportunities we have here today, besides the positions that are doing fabulous overnight. Welcome back, my friends. It's a good day for the bulls. It's a good day for the bulls and the metals. One of the things that I'm kind of looking at, and I want to share this with you here. If we take a look at Bitcoin, and what I want to see and show you is I'm looking at a pattern that seems to be very familiar and similar for gold, silver, and Bitcoin. Since the September low that we talked about, that we anticipated was made. And here you're looking at a chart for Bitcoin. There's a lot of activity going on in the gold market here. Bear with me. And what we're looking here is at pretty much the Bitcoin chart since September 28. Now I'm going to show you the gold chart since September 28. It's identical. And it's into the blue zone, breaking through the average price, completing the targets of the daily and the weekly sell 1 and sell 2 levels daily. You can see clearly here the reversion unfolding, and this is the intelligence that the AI provides us. It tells you don't sell down here when it's in blue. If you take a look at silver, same, almost exact pattern. In fact, the silver market is closer pattern. And it's real interesting because what we're looking at when we take a look at gold and silver are primarily the monetary indicators. Gold and silver have a few different dimensions. They're economic indicators. You can trade them as a commodity based on its supply and demand. And it's also a risk asset, a risk hedge, you might say, that can be used against the implosion or the valuation of a currency. And so, one of the things that I've been pointing out here is so far this year, the gold market is down 6% at the lows. And, the silver market came down, 13, 14% at the lows. This is since the beginning of the year. And everything else has taken off, except for June, that we saw this rhetoric of the Fed come in and disrupt the markets. And we've been in a corrective pattern since the month of June until now. And in particular, the monetary assets here. And all of a sudden, Bitcoin is trading like a monetary asset. And this is the things that I want to point out to you. that it could be that Bitcoin is aligning itself with the gold market as a monetary asset, as a digital asset. And it's not going to be long before we get, in fact, a cryptocurrency backed by the gold market. And I think in order to build the credibility into that world of digital assets or cryptocurrencies, they have to be supported by something. Excuse me. They have to be supported by something besides technology. And Saba Bank in Switzerland is the first bank that essentially has been authorized and licensed as a securities dealer to be able to essentially do this in the digital markets. They have legitimized the crypto markets. So we're moving into another world, and Saba Bank is the first one that has moved into that world. So when I take a look at the relationship, very closely relationship between all the monetary assets here, and the leading ones, which happen to be gold and Bitcoin, including silver there as poor man's gold, so to speak. It's interesting to see that relationship unfold. And more, I think that crypto or Bitcoin are becoming truly part of the financial community. And Bitcoin is really the new kid on the block. So it looks like we've seen, once again, the reaction of gold and silver to be a reversion back up to the mean, as the markets were completely overdone on the downside. And I think for most of the markets, including the digital markets, have been oversold, anticipating again a lot more hawkish talk from Chairman Powell. Enjoy the market coming your way, my friends. We've been waiting for a long time for this. Hold on to your core long position and enjoy the day trading opportunities as we did this morning. And let's see tomorrow here what the market brings. But congratulations for those that have been following me here in the precious metals here. The time has come to enjoy the ride. You have a great day. I'll talk to you soon. You take care.